Checking out the Nasdaq futures on the daily chart here. We have two retracements drawn. The red one is the primary, the orange one is the secondary. We clearly have a downtrend from the all-time highs, and an uptrend is from August 5th, which is so far held on most tests. We also have a secondary uptrend established off of the September lows as well. We see the blue here in the volume profile highlighting that this is a high volume node over the course of the last 800 days. So it takes 8% of all total volumes traded to turn this area blue. So as we know, this is a very impactful zone on this chart. Now we'll go ahead and we'll just strike a few more retracements in the shorter term. We'll just put the 61/8 of all these on. So the first one we'll draw here will be in yellow. This is the 61/8 from the November 1 low up in the all-time high to give us a supportive structure. You can see that on retest here, the 23.6 there and the 61/8 also held on that first bounce. From there you could put another one on, going from the all-time high down into that low, and that's going to set another secondary resistance. We'll go ahead and put that in the G's. And finally, if you so do wish, you could strike an additional here, and we'll just go ahead and turn that to a blue. And so now we have the levels in only for Fibonacci 61/8 that should act either as support or resistance. If we want to, we can go down into a 195-minute chart as well. And we see a similar idea here, whereas our nodes have changed their location base because of the change in time frame to 195. So basically it halves the amount of time that it's looking for. But ultimately you still see that in between the 23.6 there at 20,400 and the shorter term 61/8 up here at 20,664, that this high volume node remains in that area. So just from this standpoint, we can say that this area should be supportive or offer some sort of demand structure, sans exogenous events or news-based events. And furthermore, if we want, we can go into some of our other indicators here, like our accumulation distribution. And if we go ahead, just pull that up, we can see that there is a positive divergence here, whereas let me change this color real quick so it's a bit easier to see. There we are. And so we see, whereas the market is not setting new highs, the accumulation distribution is setting new highs. So this suggests that there's bullish behavior within this consolidative period. And so for us, we know that we have a resistance here at 20,975, which is also downtrend from all-time highs. And then we're going to have this higher volume node up here in the 20,130s to 20,230s, basically, as resistance before we get to that current all-time high up there, 21,340.75. So ultimately, a little bit more consolidative process probably underway in the shortened period of time today. If we do see a breach of our supportive range, then that really starts to open up some real concerns just because of the top heaviness of it. But all in all, on a daily time frame, this is still a very, very bullish chart. Supportive volume underneath price, multiple levels of 61/8 and Fibonacci supports, uptrends, bullish divergence within the accumulation distribution. So all in all, it seems like a very safe market just against this 20,400. Hope everybody had a great Turkey Day. Hope you have a great shortened session today and a great weekend to follow. See you all back here on Monday. Thanks.